exactly the cycle shape that we would have expected. In other words, it is a neutrally, it is a neutral cycle shape, a neutral cycle shape, okay? And it is in fact a perfect neutral cycle shape that is forming at the moment. Do you tend to say, so the 80-day cycle is suggesting that we are close to forming a trough? Yes, exactly. And that's what's happening at the moment. And I haven't looked at this analysis in too much detail. I'm using this analysis to talk about things at the 40-week level and greater. I'm not sure that I would agree entirely with this analysis when we zoom in and take a look at it all the way down to the 80-day cycle level. I think this positioning of the 20-day cycle peak might be wrong, but let me show you how we can start considering this. Let me count bars from those troughs. As you can see, according to this analysis, the 20-day, the 80-day cycle, which the market is heading towards at the moment, is looking very overdue. It's looking, in fact, 22 days overdue on the 80-day cycle. It's looking just about on time for the 20-day cycle at 22 bars, and it's looking about 20 days overdue on the 40-day cycle. But the reason for that is because the placement of this 20-day cycle trough is probably not correct. Let's have a look. There we go. Probably this 20-week cycle trough would be better placed at this particular trough over here, and that's not a terribly complicated thing to do, to move that trough, in which case we get a slightly better analysis, and that trough would place it in the second week of March, and so we would be able to do that. I'm not going to waste time doing that now, because that's the analysis that we're looking at in the Australian market. So I'd rather move to the Australian market, which I think is closer to the hearts of many of the people with us today. But it would be a very simple process for me to simply move this 20-week trough over there and say to Sentient Trader, I think that, in fact, that's where that trough is forming. So let's do that, and let's take a look at the Australian market and do exactly the same thing and come all the way down to the 80-day cycle trough and decide for ourselves whether in fact that 80-day trough has occurred, when it's occurring, what's happening with it, what's going on with this 80-day cycle trough. Because in fact the picture in the Australian market is exactly the same. Here's the analysis we've been looking at in the Australian market. I won't bore you by going through all the details again, but I'd just like to point out a few things immediately in terms of the comparison I'm drawing with the Italian market today. And the first thing is, obviously, we're looking at the same 4.5-year cycle developing since March of 2009. Okay, it's the parallels are extraordinary, as you can see. And again, although the Italian market is a very bearish picture, and there's no wonder that Italians are tutting and muttering under their breath when you pass them in the street, because the Italian market is extremely bearish. The Australian market, however, is still bearish, I would like to point out. And as you can see, and again, we'll take a look at the shape of this cycle. What's the first thing that we look at? The first thing we look at is, where is the peak of the cycle? The peak of the cycle occurred over here. As you can see, that's the highest price that was attained in the current 54-month cycle. So the peak of the market of the 54-month cycle occurred in that was probably about April of 2010. April of 2010 was actually, interestingly, shortly after I'd moved to Italy, and everybody was feeling terribly bullish, and I spent the first few months of 2010 being extremely unpopular amongst all my friends, saying, I think the market is approaching a high that we're not going to see for a very long time. And I think they've forgiven me now, although they still regard me with some suspicion, because nobody ever likes a bear. In fact, in some countries, it's probably considered non-patriotic to be bearish about your stock market. Of course, it has nothing to do with patriotism, and it has everything to do with cycles. But there is the peak in March or April. I think it's April of 2010 in the Australian market. And so that is an early peak. What do I mean by an early peak? Well, if you look at the semicircle for the 54-month cycle, there's the peak of the semicircle. So that's what could be considered the ideal peak, the idealistic peak. You know, that's where the peak should happen in a neutral market. The peak occurred early, although as you can see, the market tried to come up and regain those levels, but it failed to. When a market tries to come back up to that level, and most Australians, I'm sure, were holding their breath around about this time to see whether their markets would exceed that level. Of course, the American markets have exceeded that level, so that's an interesting parallel that we'll look at it in a moment. But the peak of the 54-month cycle is nevertheless an early peak, which means that for quite a long time we've been looking at a bearish 54-month cycle unfolding. Okay, what is the second thing that happens in a typical bearish cycle? The first thing is that the peak occurs early. The second thing is that the trough tends to occur lower than the trough at which the cycle started. Now, this cycle started in March of 2009. So there we go. I've just made rather a bearish statement. I'm sure you're all quaking in your boots. But what I am saying is that for this cycle to be a perfectly bearishly shaped cycle, which at the moment it looks as though it is doing, then by the end of this year or early 2013, we are expecting prices to go lower than they went in March of 2009. Okay? There we go. I've said it. It's not very nice, I know. But that's the truth, and that is the cyclic picture that is unfolding. Of course, markets are not perfect. So, and often you get mixed shaped cycles. So often you will have early peaks, but higher troughs. And there is a glimmer of hope. There is a silver lining to this story. There isn't a silver lining for the Italian story. You know, there is no doubt we're going below the levels of 2009 in the Italian market. The Australian markets, there is a glimmer of hope, and that glimmer of hope is that in terms of where the Australian market is in terms of a bearish or bullish picture, the Australian market is straddling the sort of bearish and bullish picture of the Italian market and the US market. So we'll have a look at that in a moment. But I must warn you that the 54-month cycle that is unfolding in the Australian markets is presently bearish. And nothing that it's doing is pointing out to us that it is anything but bearish, which means that potentially we're going to be seeing lower prices below the low of March of 2009 before the end of this year or early next year, which I am standing by for taking short trades is going to be something that you are probably going to need to be doing. So there are the lows of that period. They were at a low of 3,100. So, and let's just turn off the semicircles. There is the exact low, in fact. And that low is 3120, roughly there. So it's about 1,030 points below where the market is at the moment. So I know that's a bearish and possibly unpopular prediction, but it is certainly what seems to be unfolding. Now let's take a look at the current 40-week cycle, which we did in the Australian market as well. Let's have a look at the shape of that 40-week cycle, and I'm going to draw the shape of that 40-week cycle, and I'll show you how simple all of this is. There's the rise to the peak for the current 40-week cycle. There's the drop to that 20-week cycle trough, and here's the rise to the next peak. Now you might remember, if you've been with us for several weeks, you might remember the conversation that we had in this week over here, where I was discussing whether or not the market would in fact attain a higher peak or not. And we discussed the fact that that because of the neutral underlying trend of this cycle, in fact the peak would be expected to be about equal. It could be a little bit higher or a little bit lower, and in fact it popped up a little bit higher. And then of course since then the market has been coming down pretty nastily. Okay, so there's our cycle shape as it exists at the moment, and of course it's expected to come down towards the 40-week cycle trough, which is expected, as you can see from this circle and whiskers, is expected sometime towards the end of May, very possibly synchronously with the 80-day cycle that we're heading down towards at the moment, and that's looking like very early June, first week of June perhaps, or something like that, as you can see from this circle and whiskers. Over here, the 80-day cycle is expected early June. We'll speak about that in a moment. Let's look at the shape of this 40-week cycle. Notice how the shape of this 40-week cycle is very similar to the shape of the Italian 40-week cycle. So although the Italian market is currently much more bearish and the Australian market is just a little more bullish, their shapes are very similar. It is a neutral shaped cycle, as you can see, because of the fact that that the peaks are very nearly equal. If anything, this is a slightly bullish shaped 40-week cycle. This is a slightly bullish 40-week cycle, but only very slightly. And when a cycle is slightly bullish, often that happens when you have neutral underlying trend. Do we have neutral underlying trend here? Yes, it's the same calculation that I performed for the Italian market. So it's +1 for the 18-month cycle, -1 for the 54-month cycle, equals 0. So it's a neutral underlying trend. For this 40-week cycle. So neutral underlying trend, you'd expect about equal peaks, which is exactly what we've seen. Where is the trough of the 40-week cycle? And the trough of the 40-week cycle is expected towards the end of July, possibly sometime July, August. There's the 40-week cycle. Where's that trough going to be relative to the trough in October of last year? That's perhaps the big question. Is your market going to head down lower than that trough, or is it going to remain above it? Because this is a neutral underlying trend, and I see a question, I'll get there in a moment, because this is a neutral underlying trend, theoretically, we expect this trough to form at about an equal level. Okay, so we expect the market to come down to that level. It could be slightly above it or slightly below it. What's my 2 cents worth? Well, this is a slightly bullish cycle shape that has been unfolding because of this slightly higher peak which occurred here in April last month. That slightly higher peak gives us some encouragement to believe that in fact the trough, the 40-week cycle trough, might form at a slightly higher level than the trough in October of 2011. But there's not going to be much in it, to be honest. We're looking at markets heading down to approximately that level. Jitendra, how's the 80 days and the 40-day cycle for the Aussie market? Let's take a look at exactly that question at the moment. So this is just before I do that, this is the analysis we've been talking about over the past several weeks. 20-week cycle trough on the 6th of March. Let's zoom in and let's see what's happening. How many bars have elapsed since the 20-week cycle? There have been 71 bars. Okay. Now, as you can see, the market is heading down towards this nest of lows, which is the 80-day cycle. The longest cycle in this nest of lows, and you can see from these sort of slightly shaded boxes, translucent boxes, terribly complex coding to get that translucent box there. That's a nest of lows, and the highest cycle, the longest cycle in the nest of lows, is the 80-day cycle, which means that we talk about the market currently heading down towards an 80-day